Welcome to Market Mind Games, where we'll explore the fascinating world of investing, trading, and risk. Have you ever wondered why some people seem to have a natural talent for making money in the stock market, while others struggle to keep up? The answer lies in understanding the psychology behind our decision-making process. In this presentation, we'll delve into the complex world of emotions, intuition, and self-awareness, and how they can impact our ability to make informed decisions. By the end of this presentation, you'll have a better understanding of how your mind works and how you can use it to your advantage in investing and trading. Emotions are an integral part of investing, and they can have a significant impact on our decision-making process. Fear, greed, and overconfidence are just a few examples of emotions that can cloud our judgment and lead us to make poor investment decisions. For instance, fear can cause us to sell our investments prematurely, while greed can lead us to take on too much risk. Overconfidence, on the other hand, can make us believe that we're smarter than the market and lead us to make reckless trades. These emotions can be difficult to overcome, but it's important to recognize them and develop strategies to manage them effectively. Emotions are a complex interplay of physiological and psychological processes that have evolved over millions of years to help us survive and thrive in a constantly changing environment. They are an integral part of our everyday lives, influencing everything from our decision-making to our relationships with others. At the core of this complex system lies the limbic system, a group of structures in the brain that are responsible for processing emotions. The amygdala, for example, is a key player in the processing of fear and other negative emotions, while the prefrontal cortex is involved in regulating and modulating emotional responses. Research has shown that emotions can have a profound impact on our behavior, often leading us to make decisions that are not in our best interests. For example, fear can cause us to avoid taking risks, while greed can lead us to take unnecessary risks. However, emotions can also be harnessed to our advantage. For example, positive emotions such as happiness and contentment can improve our cognitive functioning and decision-making abilities. Similarly, by becoming more self-aware of our emotions and learning to regulate them, we can make better decisions and avoid common pitfalls. Overall, understanding the science behind emotions is crucial for anyone looking to become a successful investor or trader. By learning to recognize and manage their emotions, individuals can gain a competitive edge in the market and improve their overall performance. Self-awareness is a critical component of successful investing and trading. By understanding our own emotions and biases, we can make better decisions and avoid common pitfalls. One practical tip for improving self-awareness is to keep a trading journal, where you record your thoughts and feelings before, during, and after each trade. This can help you identify patterns in your behavior and make adjustments as needed. Another strategy is to practice mindfulness, which involves paying attention to the present moment without judgment. This can help you become more aware of your thoughts and emotions, and prevent them from clouding your judgment when making investment decisions. Intuition is often seen as a mysterious and unexplainable phenomenon, but when it comes to investing and trading, it can be a valuable tool. Successful investors and traders often rely on their intuition to make informed decisions in the face of uncertainty. Intuition is not a substitute for research or analysis, but rather a complementary tool that can help investors and traders navigate complex situations. It is the ability to recognize patterns and make connections that may not be immediately apparent. By trusting their instincts and combining them with sound research and analysis, investors and traders can gain an edge in the market. In conclusion, we have learned that emotions play a crucial role in investing and trading. By understanding the science behind our emotions and being self-aware of our own biases, we can make better decisions and avoid common pitfalls. Additionally, intuition can be a powerful tool when used correctly. We encourage you to apply what you've learned today and become more self-aware in your investing and trading practices. Trust your intuition and use it as a valuable tool in your decision-making process. Remember, successful investing and trading is not just about numbers and data, but also about understanding the psychology behind it. Thanks for watching. Like and subscribe, and we will catch you on the next one.